and it's that time of the week where I love to call on Mr. Robin Cross of StoneX in Chicago to talk about the lumber market action. And good to have you with us here today. Robin, I always look forward to our discussion. So last couple times I spoke with you, we had the lumber market taking a big swan dive. I just wondered what the trend is this week here.
The dive continues, good friend. Thank you. Thank you for having me. Let's start off with our usual. We'll go through some prices. Right now, May, your lead month, is sitting at $880.50, down 90 cents with 91 trades. That's actually more volume than I think I've ever said on the air in recent weeks for this early in the day. July, which is soon to be your lead, is $801.50, up $16.80. So there's a big disparity between May and July still, and the volume over there is 39. Well, to figure out how we got to this swan dive, Marlon, we got to kind of have a little history lesson. You know, I've been talking about volatility week after week after week, and that's still the persistent theme of lumber. I mean, it really is. So let's do like a little recap here. So in January, we expired 1237, okay? That was decent, pretty high. I mean, you know, it was fairly priced versus the highs we've seen. So, I mean, it was okay. It was doable. Guys were able to, you know, kind of buy and sell. But lumber still had its shipping issues, and that's why we were seeing this high prices in the winter to begin with, right? So shortly after that, we posted a high around the 19th of 1311, you know, and only to see the market get rejected. Right? When you have these Jan expired, March comes back on, and we're going to go back over this from March to May as well, so it's going to be a little difficult to follow, but I'll try and clean it up best I can. So January expires, but because March expiration is so far away, you don't have that, you know, that pressure. Guys don't have to pay up or sell down. They can kind of wait and watch since there's so much time in the contract. So what ends up happening? When you post a 1311 high, with March expiration so far away, the market broke. We took it all the way down from January 19th only to February 2nd, from 1311 down to 900, right? So that's a loss of 411 points, or a change of almost $45,000 a car. At that time, though, March was a massive discount to cash. Cash was still trading around the 1400 area. So it, you know, I really felt on the air and in person that this was a good time to buy. Guys that were on the fence, and, you know, they really needed to step up and get some stuff covered. So ultimately, that's what ended up happening. So then March rallied from 900 all the way back to 1477. So that was a gain of 577 points, almost in a straight line, right? That's a difference of $64,000 a car. So if you're following it, we lost 50 grand, we gained 64 grand, and the saga continues. March ultimately ended up expiring at 1420, which was the second highest expiration lumber has ever seen. But this was, like I said, it was on the tails of all these transportation issues. But I was starting to see some cracks in the cash market. So if you remember at that time, I was really warning guys to be careful on trying to own lumber up here, because it just didn't feel good. It didn't feel right. It kind of felt unnatural to be that high. I think with the geopolitical situations we're seeing, there's too much fear in the market to sustain those kind of prices. So then we fell, right? So from that high on March expiration down to today's low, so barely 3 weeks, we took out 616 points in this market. We also took out March's swing 900 low to make a new low today of 861. So that's down 616 points. That's about, you know, $62,000 a car.
Wow.
And I think this same pattern is going to continue. You really, you know, we're getting a little oversold now, but cash has been eroding with this. That's the difference. In the previous two breaks, you didn't really see cash. It was more of a futures thing. But now you're starting to see cash. The mills are starting to get more of their production out the door. Last week it was reported they got about 50% of their cars. This week they're already up to 60%. That's a stark difference from the 16% we were seeing all through winter.
Yeah,
so I think things are starting to get better just in time for the building season, but caution is still the word of the day. With these kind of wild swings, guys got to be careful what they're doing out there, for sure.
You're absolutely right, and I'm so glad you brought that up. And yeah, we're just going to be getting right into the core of the key building season right now as temperatures finally warm up. At least I think they will in the next week or two. Great information again, Robin. Thanks for talking with us and explaining all that. Lots of dynamics at work. We'll be back in just a moment, and I'll cover our livestock trade right after this.